Hello everyone and welcome back to the 11th episode of the S&P Saga, your weekly analysis of the S&P 500 index. Let's dive right into it for the week ended on January 12, 2024. The S&P 500 closed the week at 4,783.83 cents, up 1.8% from last week. The PE ratio, based on current price and the latest earnings, stands at 25.96, almost unchanged from last week. Let's start with the gainers. Microsoft is up 154 billion or 5.6%. on no particular news. NVDA is up 138.6 billion or 11.4% after announcing new AI-generated GPUs and software ahead of the Consumer Electronics Show in Las Vegas. Amazon is up 96.9 billion or 6.5% after announcing that it's laying off employees in its Prime Video and Studios business. Alphabet is up 79.1 billion or 4.6% after announcing a new round of layoffs at Google as well.
Just keep coming. The latest, Google cutting hundreds of jobs in its engineering, product, and hardware divisions. Deirdre Bosa has that story in today's Tech Check. Dee, morning.
Hey, Carl, good morning. So yes, the layoffs keep coming, but the narrative around them is changing. Cuts over the last few years, they have been about rebalancing workforces after pandemic overhiring. But the new wave may be more about directing or allocating resources toward a new generative AI computing shift.
Apple is up 73.7 billion or 2.6% after announcing that the Apple Vision Pro will be available in the US on February 2nd. Moving to the losers, Tesla is down 59.1 billion or 7.8% on a series of bad news this week. The company is boosting pay for factories at its US location where the UAW wants to unionize. A recent Wall Street Journal article about Elon Musk's drug use is making the rounds. And as we mentioned last week, BYD took over Tesla as the #1 manufacturer of electric vehicles. Boeing is down 18.9 billion or 12.6% on increased scrutiny following the January 5th plug door failure on Alaska Airlines Flight 1282. That's another incident involving their 737 MAX model.
It's the latest impact to hit the company after the Alaska Airlines incident last week. As the MAX 9s remain grounded in the US, travel industry analyst Henry Hartevel says it is not the first incident prompting concerns.
The 737 MAX has a very checkered history and really has damaged Boeing's reputation.
Boeing's MAX 8s were grounded after two deadly crashes in 2018 and 2019. The reputational harm came from investigations finding the company had concealed details about specific software that activated in both crashes. After the incidents, both Boeing and the FAA adjusted their approaches to safety and certification. A shift from years ago when the FAA waited months after the 2018 incident until the second crash to take action. Aviation management professor John Graddick says the swift response from the FAA shows a change.
The regulators are saying we will err on the side of being extremely cautious.
But even amid investigations, it may not be enough reassurance for the public or the airlines.
Boeing knows if people don't trust its airplanes, airlines are less likely to buy them, and travelers will do what they can to avoid them.
From layoffs during the COVID-19 pandemic that sent expertise out the door to its reliance on the 737 line, Graddick says Boeing needs to return to the drawing board.
I think the time has come for Boeing to really rethink its design and its philosophy on commercial aviation.
Hartevel cautions what the inspections into the MAX 9s find could have further impact on the company.
If this is found to be truly systemic, that's troubling.
Sean Preble, Global News.
United Health Group is down 14.7 billion or 3% after announcing a spike in care use during Q4 that it attributed to a rise in RSV vaccinations as well as elevated costs related to COVID-19. I guess we're not out of the woods yet. Bank of America is down 12.9 billion or 4.7% after posting a disappointing Q4 2023 results.
They missed on a lot of critical figures here, going down to the core items here. For example, in trading, where you've seen them really punch above their weight, they did come in below estimates on fixed income as well as total sales and trading revenue. Importantly, also, they came in below estimates on net interest income. This is what we've been talking about, their ability to bring in lending money at the time when you do see consumers still borrowing. Are people going to slow down their borrowing activity if they feel overextended? The outlook for that is really important here as we wait for further communication from executives here. Provision provision for credit losses, while that came in below estimates, John, you did see charge-offs come in above estimates, which means loans are starting to sour just a little bit more than Wall Street expects.
The statement comes out, John, and is a generalization here, and Shanali and Gerard are the pros on this. Return on average tangible common equity goes from a 15-ish to 13 for Bank of America. So there's that key ratio ebbing away a little bit.
Wells Fargo coming out as well, but let's just sit on the trading numbers out of Bank of America. Just for a beat, Shanali, 4Q trading revenue, as you pointed out, 3.75 billion, the estimate 3.84. FIG trading, can break it down from FIG trading to equities trading. FIG trading coming in at 2.21 billion, the estimate 2.4. Equities at 1.55, the estimate 1.44. What would you read into that right now?
They had 0 days of trading losses. On one hand, that is great for a bank. On the other hand, remember, prime services, the ability to service asset managers and hedge funds, super competitive. Goldman has been trying to eat away at everyone's share. And so watching into next week how trading falls across the pack will be important. How much risk are you willing to take on in this volatile market is the question for these banks.
JP Morgan is down 9.3 billion or 1.9% after posting disappointing Q4 22 results as well. This follows a poor performance of the investment bank division.
Equity sales and trading revenue 1.78 billion, the estimate 1.93. FIC comes in at 4.03 billion, the estimate 3.84. There's a ton to get through here with JP Morgan. Just the early stock reaction, down 4%. Shanali, what do you see?
Yeah, the interesting thing here is investment banking is not jumping back as quickly as anybody expects. Remember, even if deal making came back at the end of last year, you're not seeing the banks clip those fees yet from this activity. It takes a while for those fees to float in. Remember, equities also below estimates. This is another competitive place on Wall Street today. Fees have been light the last couple of years, but that's a place that investors are expecting a bounce back as well. FIC came in above estimates, a whopping $4 billion. But is it enough to offset weakness elsewhere? We're keeping an eye on those provisions as well. Remember, JP Morgan, at first glance, they're coming in above estimates for the provisions. Do they expect the environment to be weakening a little faster than investors expect?
Buried at the bottom of the very clear JP Morgan report, this is not CFA Institute work, John. Fortress principles. Book value up 16%, tangible book value up 18%.
This week, there were no deletions or no additions to the index. So how to use the information we just covered? Let's start by performing a deeper dive into the drop in performance of the losers. So this week, I believe that Boeing presents a good price if their fundamentals are still sound. Be careful with this one. This might very well be a falling knife. 18 companies will release earnings during the week ending January 19, 2024, 13 of which are financial institutions. The most interesting will be Goldman Sachs on January 6th at 7:30 a.m. Eastern Time, expected to report $4.27 EPS on $11 billion of revenue for their Q4 2023 results. PNC Financial Services on January 16th at 6:30 a.m. Eastern Time, expected to report $2.71 EPS on $5.29 billion of revenue for their Q4 2023 results. Kinder Morgan on January 17th at 4:30 p.m. Eastern Time, expected to report 30 cents EPS on $4.4 billion of revenue for their Q4 2023 results. US Bank Corp on January 17th at 8 a.m. Eastern Time, expected to report 0.91 EPS on $6.86 billion of revenue for their Q4 2023 results. Citizens Bank Corp on January 17th at 9 a.m. Eastern Time, expected to report 0.84 EPS on $2 billion of revenue for their Q4 2023 results. Discover Financial on January 17th at 4 p.m. Eastern Time, expected to report $2.51 EPS on $4.11 billion of revenue for their Q4 2023 results. To see how the market started the year in 2024, you should watch this video next.